The local market and what we should be expecting today with Evan Lucas over at IG in Melbourne. Evan, thanks so much for your time. Let's start with the reaction to this news of Cyprus rejecting the bailout plan, or at least the deposit levy attached to it. US stocks still open for that announcement. Not too much of a reaction. Did you expect more?
Look, there was sort of a tale of two seas really last night with regards to what happened open in Cyprus. Look, Cyprus obviously unanimously rejected the bank deposit levy. There was 30 people against it. Nobody actually physically voted for it, which includes obviously the Cypriot Prime Minister's own party, and there was 19 abstentions. So it wasn't just a rejection, it was a resounding no. And obviously to the cheers of the crowd standing outside the Parliament at the time, that's obviously said that as well. Look, there's absolutely no, it's unprecedented to sort of see what happens now. The ECB did say pretty much about 2-3 hours ago that it will basically uphold its liquidity providing to Cyprus within the existing rules, and it will sort of see it hold there for the current time. My personal take on what will probably happen is that the ECB and also the European finance ministers will go back to Cyprus, give it probably one or maybe even two more chances to probably push this through. And that obviously saw the US dollar, the euro jumping up slightly on the US dollar, but the euro is now at the lowest level since back in December last year. It's trending lower against most of its major peers, particularly against the yen and the US dollar. And it does look like there will be a bit of contagion fear that sort of pushes through the European markets, particularly over the next couple of days with this kind of data. Moving to the other side, obviously the glimmer of hope we saw was over in the US. The US actually, with the Dow, finished slightly positive, and that was basically because we saw the commercial department showing that new home starts actually jumped up to 917,000 for the month of February. Bloomberg had expected roughly about 1915, so that's actually quite a nice little beat. It's up about 0.8% for the year. They were expecting about 910 for basically for the annual year. So quite a strong sort of lead from the US. Building permits were even better, and they were up at 968,000. And that means that they're at the strongest level since June 2008. So that's why we saw some good news coming out of the US. It did sort of manage to sort of hold back what was going on over in Europe. They obviously saw the S&P fall back, and that was because there was basically a big wave with the Cypriot deal. But it does show that the US, which is obviously the largest economy in the world, is still moving ahead. It's still quite strong. And housing data is always a very good sort of leveler for how household wealth is sitting and how obviously the US economy is trending. And I'd probably much rather take that than with regards to the euro fears that we're currently seeing. But on a short-term basis, that's still going to drive the markets.
Yeah, absolutely. Then why are we looking to open so low today? I mean, we look at that lead from Wall Street, pretty flat, not too much negative sentiment floating around there, and yet SPYs today pointing down fairly heavily. I do know that we saw RIO and BHP hit pretty hard in London overnight. Is this a commodity price story?
Yeah, it's a couple of things. Look, the one thing I'll probably sort of quickly add in there, obviously the other thing that's happening today is Japan is closed for a bank holiday, so we're not going to get any sort of regional leads from that market today. But the main thing is that, look, there's a lot of broker downgrades coming into our market. Yesterday we saw JP Morgan downgrading their look on the bakes. They're basically saying that currently on a PE ratio that we're about 18.5% above our overseas peers. We're 13% up on the year, and we're about 17% ahead of a 3-year average. That's why we probably saw the banks hit in the afternoon session when the Cypriot deal did look like it was going to fall through. They may even fall a little bit further again today, but the main story last night was that Goldman Sachs came out and downgraded its outlook on iron ore. It basically thinks it's going to step down on sort of an increment basis, heading to sort of about 130 in the short term, looking to about 110 mid-year, and all the way down to $80 a ton towards the back end of the year, giving you an average of about $139 a ton. It then also did a massive downgrade on Rio. It's put a high conviction sell on Rio Tinto. That saw Rio down 5.2% over in London. It moved BHP to a neutral, and it saw BHP down 3.55% in London as well. I mean, if there's anything to go by, there was a lead from the US. Obviously, Clifton Natural Resources went down 6.1% on Goldman's downgrade on iron ore, and that's really what's going to hit us hard today. And it's why we're probably calling the market down about 22 points to about 49.65, and it may even go lower with the fact that the banks are going to get thrown in there as well.
Okay, Evan Lucas from IG, thanks so much for your take on all of that. Appreciate it.
Thanks, Kate.